Hey guys, Jared Wesley here of Live Traders, and it's that time of the week. It's lecture time, and this week's topic, guys, is how to master your emotions in trading and in life. All right, trading is a very psychological, emotionally draining business at times, and if you don't get it right, you're going to lose a lot of money. A lot of people think trading is about technical charts, support, resistance, bottoming tails, topping tails, volume, all that other stuff. And it is. But none of that stuff matters if you can't get this right, okay? And we deal with this in day-to-day life. We also deal with this in trading life. So today we're going to talk about both of those aspects and how negative emotions and psychology can impact your trading in terrible ways if you're not smart and if you're not aware of it and have mindfulness, etc., and so forth. It perhaps is the single most important part of trading, and you need to get it right to be a great trader. If you like these videos, please click that like button, hammer that subscribe button. I'm Jared Wesley of Live Traders. Let's get to it. This week's lecture topic is the psychology of winning, how to master your emotions in trading and, dare I say, in life. Emotions are really everything in this world because how we view things has a large impact on our emotional state of mind, right? Or vice versa, if you want to look at it like that, right? You know how people say, life is 10% what happens to you and 90% how you react or how you view it. And I'm a big believer in that. Sometimes, I hate using this word because it's such a common word these days, but certain things trigger you. And I hate using that. But when those things happen, or somebody gets under your skin, or a stock doesn't do what you want it to do, there are ancillary or leftover remains of those emotions, meaning they stay with you and potentially lead into doing other things that aren't productive or could be even destructive. All right, and again, not just in trading, but in life in general. So it's very important that we modulate our emotions to some degree. Look, we're humans. We're not robots, so we will have them. And I'm not telling you guys to not have them. And that's a key point that I want you to hear again, because I'm going to talk about it again later. It's okay to have emotions. It's actually okay to let some of those emotions out. But there's 2 points to that. One is to what extent. You can't let them get destructive, right? For example, road rage. It's okay to be pissed off somebody cuts you off, but you don't go drive your car past them and run them off the road. That's destructive, right? So you certainly don't want to do that. And then you don't want to let that carry over into something that lasts longer, right? Last a day, last a week, last a month, and then you're in a state of depression or something like this. So psychology is a very, very, very important part of life as well as trading. But today we're going to focus more on the trading aspect of it. But it does manifest itself in all aspects of life. I have an older When Will the Insanity Stop? And you might as well show it, right? I mean, why not? Because, well, you need a refresher. You need a reminder of how bad things can be if you let your emotions get the best of you, if you don't follow your trading plan, because this business, unlike many others, is extremely serious, like extremely serious. Look, let me be clear about something for a second, okay? When you work for somebody else, let's just be honest. If you make a mistake, most of the time, the company mops up your mistake. It's true. I was a institutional trader in New York. I made a $50,000 mistake. The company ate that. They ate it. Okay? You ever break something on the job? You're probably not buying a new shovel. You're probably not buying a new vase. You're probably not buying a new computer that you knocked off or a monitor. The company eats that money. Almost always. Okay? Guess what? You are the boss now of your own trading business, which means if you make a mistake, whether it's throwing your mouse or not taking a stop loss, you are paying for it. And it's the one thing that is hard for me to explain to the employee mentality people. You don't understand. When you're the boss, there are no days off. There are no hours off, minutes or seconds off. Your phone is with you. You're contactable 24/7. If something breaks, it's your responsibility. Somebody slips in your store and cracks their head, it's your responsibility, even though it was your employee who messed up. Guess what? In trading, you are the boss. You are the boss. So when you mess up, the buck stops on your desk. Personally, I like that. I like having that control. Some people are not used to that control, and when the consequence happens, they're not used to dealing with it because someone else is, you're used to someone else mopping up your problem. But anyway, this is older. It's 4 years old now, but it's still relevant. Last hurrah before turning to professional help. Hi, guys. I'm a retarded 22-year-old that is screwed up big time. Can I get in trouble for that these days? I was literally reading. I'm kidding. All right? But anyway, somebody has made a massive mistake. Let's just get to the main point. 22-year-old lost $300,000 of his parents' money, right? Then came the crash of SPAC and popular growth stocks that sheep retail investors like myself scooped up. And long story short, my parents' account ended minus $300,000 on the year of 2021. But the original account in my name is listed as up 200 in a year. I can't find blah, blah, blah. We don't care. Okay? This person lost 300 grand of someone else's money. Okay? Now, in some areas, Guido's going to get to you and, break your kneecaps. In this case, I'm not sure what parents would do. I mean, they clearly trusted their 22-year-old son with that kind of money, which I find, wow, right? Prove to me. Here's 10 grand, go out and work with that. And I'm saying this because that's how I would treat anybody that's new at something. Hey, here's a small amount of money. Why don't you go work with that? We'll review it every quarter, twice a year, whatever, and we'll see how you're doing. And if you're doing well, then we'll slowly give you a little more rope, a little more leash. But you don't just go, hey, here's 300 grand or 200 grand or whatever it was. So my point, though, is that this stuff really does happen. We saw one last week or 2 weeks ago where someone lost like 450 grand, and that was their money to buy a house that they've been saving for years. And now, guess what? You can't buy a house anymore, a place to live. It's no joke. It's very, very serious. So please take it that way, okay? When you're messing around, doing whatever you feel like, you're not being productive to help your future growth in this business. So please, take it. Act like a professional and try not to do stupid stuff. And this is the same, to be clear, just because you haven't lost 300 grand or 400 grand doesn't mean you're not doing stupid shit. Fact. Just because you haven't lost a ton of money doesn't mean you're not doing stupid stuff. You could be an accident waiting to happen and you just don't know it yet. Okay? You could be taking trades into resistance that have worked for the last 7 times you took them, but that's just getting lucky. And the next 27 times you take them, they're not going to work. Getting out of trades because you feel like it, right? Oh, my intuition said I should walk away because I thought the market was going to drop, so I got out and saved myself that money. I'm talking to somebody specifically here that has typed in the last 5 minutes, all right? That's still, when will the insanity stop, right? Because your plan is there to help you, right? Your plan is there for your long-term success and viability to keep you out of trouble. And every time you break it, you're hurting yourself. All right, let's dig in. So, this is nice. It sells courses and gets video views, but this is nice. I'm not going to lie. It is nice, right? Topping tails, bottoming tails, support, resistance, volume, ATR, moving averages. Oh my gosh, the list is long. Everybody loves technicals. Everybody loves them because it's something you can hang your hat on. You can look at and go, okay, look at that topping tail. What's it supposed to do? But guess what? Psychology is in that topping tail. Psychology is in the wide range green bar before the topping tail, right? Psychology is in every one of these bars. But guess what? That's just the psychology of the chart. And we're not going to talk as much about the psychology of the chart as the psychology inside your head. So there's two levels of psychology. There's chart psychology, understanding why a stock might pop or drop, understanding why it may pivot and what that volume really means in the context of the bigger picture. That's one level of psychology. The other level of psychology is your ability to decipher what's going on and act rationally even when things aren't going well. Most people, when things are going well, it's easy to do the right thing. It's like, hey, I got in this trade and it immediately popped. Well, it's kind of easy to hold it to target when it just keeps going towards your target. It's when they pull back, overlap, chop around, get a dime from your stop loss, then pop back up, blah, blah, blah. That's when it becomes difficult. And that's when you're most susceptible to making a mistake, because that's when the stress level is the highest. And when we're stressed, we tend to do things out of the ordinary. Think of it like this. I don't know if it's a good analogy or not, but day to day, things are going well with your spouse and you're getting along and it's wonderful. It's great. No big deal. But when you have an argument over money or whatever is going on in your life, you ever find yourself saying things that later you might regret? That maybe they are true things, but maybe it's just not the right thing to say to somebody to help that conversation go in a productive direction. Maybe you said something and now all of a sudden the conversation has gotten really bad and now you've gone down the rabbit's hole. Where am I going with this? I'm going with you let your emotion turn into a bonfire. You had this little tiny little fire, like a match was lit, and you're like, okay, we can blow that one out, no big deal. But now we've turned this into a bonfire. Now we need the fire department here. Now I don't know if that analogy works for you, but the point I'm getting is it's controllable when it's the size of a match. When it turns into a bonfire, you have a problem. Trading is the same way. When you have a little issue, it's within your realm of controllability. But when you let it get too far and your emotions start running your trading and your emotions start making decisions for you, now you have a problem. It's like that line in Top Gun, your ego is writing checks your body can't cash. For many traders, their psychology, ego, is writing checks their account can't cash. And they don't take a stop loss, and then they're down 10, 20, 30R. We just saw this happen with somebody in here a week or two ago. I can't remember what they said. They lost a month or two worth of profit on one bad trade. And then they said, yeah, I knew better. Well, you still did it though, right? So we're going to talk a bit about that as well. So this slide is just here for show. Topping tails, bottoming tails, normal or wide range, it's wonderful. This is what people love to talk about. But it's not really what makes you money in the bigger picture, okay? Candlesticks in context. They matter. Location, level, depth of penetration, it all matters a lot. But this is not what we're talking about. See, again, this is the chart side of psychology. This is the stronger, weaker, shock value, volume spikes, right? And you guys love to talk about this stuff, which I don't blame you. It's fun to talk about. It's going to the driving range, hitting your driver the whole time because you don't want to practice chipping out at the sand shots. Then you get on the golf course and you might only get in the sand once. And this is actually a really good analogy. I know some of you don't play golf. But if you go play golf, 18 holes, right? 70, 80, 90, 100 strokes. You might only find yourself in the sand 1 or 2 times, maybe 3. Think about what I just said. Say you shoot a 90. You might only land in the sand 2 times that whole day. But if you've never practiced a sand shot, it might take you 4 strokes to get out on both of those, and all of a sudden 2 turns into 8. Turns into 10% of your round. Because of 2 bad shots, now it's cost you 8 strokes because you never practiced the sand shot. Because, that was too painful to confront on the practice range. Traders do the same type of thing. They do the right thing most of the time. But that 1 or 2, or let's call it 5 or 10%, destroys the 80 or 90% of the time. Unmal was just talking about that a little bit with that options play, right? You guys are still doing very well, but he made a very poor decision, didn't follow his plan, ended up losing like 15 grand on an options play, and it took out a few weeks worth of profits. Got it all back, thankfully, but now you set yourself back a few weeks. We've all done it, but you have to learn from it. Okay? So, why traders fail? You guys have seen slides called this before, but we're going to talk a little bit about it in maybe more detail today. But you exceed your max daily losses. Guys, yesterday we had a conversation, it was a short one, about if you can stop the bleed, you can make a lot of money in trading. I would venture to bet, and I don't know for sure, but from experience, that the majority of break-even traders, maybe even the majority of slightly profitable traders, have more up days than down days. If you go look at, say, a 240-day trading year, you might be up, I don't know, 140 days you're up and 100 days you're down. Okay? 140 days you're up, 100 days you're down. Again, hypothetical, purely hypothetical. And somehow you look and you're like, I was break even for the year. How could I be up 40 more days than I was down? But you're break even for the year. How does that happen? Because your down days are way bigger than your up days. You exceed your max daily loss, or you can't accept a loss, and you do one of two things, right? One of two things. You can't accept being down 1 or 2 hours, so you say to yourself, I can't lose 3 in a row. It's impossible, or very unlikely. So you take a third trade and you lose that, and you're like, well, if I've lost 3, we all know it's nearly, really, now this time for sure, impossible to lose 4. And you take a fourth trade and now you're down 4. And you should have stopped at -2 because that was your trading plan said. So really what you have done is taken 2 max loss days and put it into 1 day. 1 day has now become 2 days. And I want you to really give this part some thought. This is the thing and you guys just don't think about enough. If you're a new trader and you're only making maybe 5 hour a month, 3 hour a month, or you're break-even trader, like you're not a super experienced trader, what's a good week for you? Maybe 3 to 4 hour, maybe 5. That's a good week for you. So if you come in on any day of the week and can't accept a loss and lose 4 hour, what do you think it's going to take to get it back? At least a week. And that's, wait. That's if it's a good week. That's if it's a good week. And we all know you don't have a good week every week. So how long might it actually take to get back? Probably 2 weeks. Probably 2 weeks. So because of a boneheaded decision, your ego got the best of you. You've now turned what was a manageable loss that you could have recovered in 1 to 4 days, you've now turned it into a recovery period of 5 to 10 days. And all of a sudden, what has happened? Your one trading day has now significantly impacted your entire month. Because you're only making 3 to 5 hour in the month anyway, and you just took a 4 hour loss on 1 day. Go back. Do some research. Do some homework on your last 6 months of trading. And you guys tell me, again, do it for yourself. Tell your trading buddy. Go back and take a look. How many times does 1 or 2 days a month significantly, negatively impact your month? Probably a lot. Probably a lot. And you sit there and say, gosh, if I could just take 1 bad day a month away. You may have 4 or 5 or 6 or 7 down days, but there's like 1 or 2 that just really are impactful. If I could just get rid of those, right? Or let's go one step further, which is way worse. You can't accept the loss, so you don't take the loss. You let it go past your stop, and it keeps going and going and going and going till you finally have an issue where the pain becomes great enough and you get out and it's nasty. 10R, 7R, 15R, whatever it is, okay? You're right, Jordan. One bad day per month, is 36R a year if it's -3. But here's the thing, though. Look, we can't eliminate losses. It's impossible, okay? I don't care who you are, unless it's my wife trading because she's perfect. Outside of that, you can't eliminate losses. The key is to manage your losses. See, there's a difference. You cannot eliminate them, but you can manage them. You can go back and say, my gosh. And guys, if Ollie's here, I don't know if Ollie's listening, but you can watch this. You can learn from your past trades. Go take your last 3, 6, 9 months of trades and take a look, because I know you all track your trades, right? Wink, wink. If you're not tracking your trades, you're not serious, you're just a hacker. Either get your shit together or give up. I don't have time for you. If you're not tracking your trades, you're a nothing to me. Nothing. Because that's what your trading will be. All right? You're like, geez, Jared, that's harsh. You're not a business owner then. You're a hacker. But let me talk to the people that do track their trades for a minute. You can go back over the last 6 months, 9 months, 12 months, and you can look at it and say, all right, because you have the timestamps for all your trades, naturally, and go, wow, the last 8 times I started the day 0 for 2 and continued to trade, I made it worse 7 out of the 8 times. So let's say of the last 8 times that I lost 2R, -2, and I took a third trade, 7 of those 8 times it got worse. Well, then why would you keep trading? Your statistics are showing and proving to you that anytime you take a third trade after starting 0 for 2, you usually make it worse. Let your stats guide you. Make this easy. Make it empirical. Because if you can make it empirical, you don't have an emotional argument. Think about what I said. If you can make the data empirical, there is no emotional argument anymore. This is the data. If I do A, then B happens, or X or Y. And if 1 + 1 isn't adding up to 2, you need to stop and rethink what you're doing. But if you don't track any of it, none of it matters. And many of you don't track it. You just think for some reason you're special. You're not. Okay? Poor trade management rules. You sell too soon before your target objective. Use a trade management system you can't follow. How about this one? Let me highlight this one. I'll highlight that again. Right there. How about that? I bet you this encompasses 80% of new traders. Not experienced traders, new traders. Your first 6 to 12 months. Bet you 80% of traders use a management system they can't follow. They sit there and say, oh, I have a plan, Jared. And they feel like, you want a cookie? Right? I ain't never been to jail. You want a cookie? I have a trading plan. That's great. Do you follow it? Well, not really. Most of the time. Well, what's most? Is that 51%? Or is that 99%? Which is it? Because it matters. I don't expect perfection, but I do expect you to strive for perfection. Okay? So when you look at this, are you being objective? Do you have a management system that you actually follow? No, don't say you follow it. Go back and look at your trading plan and your tracking spreadsheet in your journal, and it will tell you how often you follow it. Plain and simple. You'll look at it and go, hey, the target was $2. I sold for $1.40. You didn't follow it. Write down, you cost yourself 60 cents. Yes, I'm fully well aware that sometimes you break it and it helps you. Big picture, it will hurt you. If you can take trading and make it as empirical as possible, you will eliminate the emotion. And the part about being a new trader, see, a lot of new traders get frustrated, like, I'm not making any money. That's the beauty of being new. There's no pressure to make money. When you're new, you're not supposed to make money. There's not a lot of businesses that have a net positive cash flow in year 1. They don't have earnings in year 1. Most don't. If you do, you did well. You're not supposed to. So the beauty is there's no pressure. Your only goal in year 1 and 2 is to get better. So you may have to use a different management system that makes less money, but you can follow it. So pare it down to the simplest common denominator. You want to do 3R all or nothing, great. But maybe right now you're only capable of 1R all or nothing. Maybe. But start there. Why? Because following your plan, it's like that. We talked about this a week ago. You know, what's that guy's name? Dave Ramsey. You know, Dave Ramsey says, pay off the the lowest balance credit card first. Right? The smallest balance, pay it off first. Why? I mean, logically speaking, you should pay off the highest interest rate card first. Logically speaking, it's costing you the most money. But he says, no. Pay off the lowest balanced one first. Why? Psychology, emotion, get a win, feel good. Because feeling good, guess what? It feels good. And when you feel good, you typically do more good. Oh my gosh, yes. Good begets good. So if you feel good, you typically do more correct things, generally speaking, okay? Now the other side of that is when you feel too good, and then your ego gets too big, and you start doing stupid stuff because you don't think your shit stinks anymore and you're too good. But in the beginning, you need those little wins. They help you get bigger wins. They help you make progress in trading. Let's be honest. When somebody slaps you every day and degrades you every day, you're working your ass off every day, and somebody comes in and goes, damn, that's crap. Next day, you're working your ass, that's crap, that's crap, that's crap. Eventually, you feel like crap, and you give up, and you say to yourself this, I'm just never good enough. I'm just never good enough. And then they shrivel away and quit. You need to feel good once in a while. You're right, Jordan. Some people are into that, and there are different approaches. I mean, there is the Dick Butkus approach, right? There's the Bill Belichick approach. There's the, who's the 85 Bears coach? Oh my gosh, love that guy. Buddy, no, he was the defensive coordinator. Anyway, someone will bring it up. There's that approach. But there's also the Zen Master approach. Mike Ditka, that's it. There's also the Zen Master approach, right? People respond differently to different things. That's just human nature. But part of that is you understanding your own human nature. You understanding what motivates you. Are you a stick person? Are you a compliment person? Some people respond to the stick. They do. They need it. Some people respond to compliments. Okay? So you have to determine where you are. I feel more people respond to the honey approach instead of the vinegar approach. Most people. Okay? Anyway, you lack objectivity. Your ego's too big. You're emotionally irrational. You ignore basic common sense. You're in denial about your shortcomings. Guys, this is where a requirement, this is where your tracking spreadsheet and a trading partner, trading buddy comes into play. The tracking spreadsheet is just, hey, this is who you are. Whether you like it or not, this is who you are. You can tell me that you're a great player, but if you're scoring 3 points a game, you're not good enough. Does that make sense? Like, everyone has an opinion about themselves that's typically elevated, right? You ask somebody if they're good at a certain sport. Yeah, I'm pretty good. Are you a good driver? Yeah, I'm pretty good, right? Are you a patient? Yeah, I'm pretty patient. We have an elevated opinion of ourselves most of the time, okay? So you need to track your trades, talk to a trading buddy, join Cliff's coaching group. You need to do something that helps you face these shortcomings and demons. Because let's be straight. We've all been there. I've been there a million times. Oh, man, you're right. I was selling too soon. Okay, I'm not in denial. That part I'm not in denial about. I'll fix it Monday. Yep, I'll fix it Monday. Monday by 10 a.m. and you're like, man, what happened? I told myself you're not going to sell too soon today. You're going to follow your plan today. All right. This time is really the last time, for sure. Tuesday, 9:48 in the morning. Oh my gosh, man, what is wrong with you? You just talked to yourself over the weekend. You meditated, you went for a hike. Monday morning, you made the same damn mistake. We had the same conversation over again. Now it's Tuesday, I'm doing the same thing again. Tell me you've never done that. I did that for about 18 months straight. Nearly every damn day. That's how hard-headed I am. Till you finally go, that ain't working, man. Saying I'm going to fix it tomorrow isn't working. I need to figure out a different approach, some other form of accountability or punishment, because what I'm saying isn't working, because this tracking spreadsheet proves that to me. So I wasn't in denial about the spreadsheet and my shortcomings, but I was in denial about how it was going to get fixed. Okay? And that's what happens. Okay? So you're going to have to be honest with yourself. How can you build on your weaknesses? By practicing them, working hard at them, or minimizing them, right? Either get better at your weakness or find a way to eliminate your weakness. Hey, I'm not really good at three-pointers. Well, either practice three-pointers and get great at them, or take 2-point shots from 10 feet, 12 feet out. You don't have much other choice. You can't just say it and it'll happen. You have to actually do the activity, right? You have to do the activity. And at some point, okay, and this is the problem with human beings. And I know you guys get mad at me sometimes, but I'm just telling you how it is. This isn't even an opinion. I'm sorry, deal with what I'm about to say. Successful people are different. They're different. Broke-ass people think everybody are the same. They're not. Successful people act different, talk different, think different. They're different. They're different. They don't sit there in bed for an extra 5 minutes going, I don't want to get out of bed. Maybe I'll just sleep another hour. I really don't want to do that. They sit there and go, I don't want to do that, but I have to do it because discipline is more important to where I want to go and make sure my goals happen. So they just do it. There's tons of shit none of us want to do all the time. Every day there's stuff I don't want to do. You do it anyway. Because it's part of the success mindset. That's it. You're going to experience one of two things. I said it to you guys yesterday or the day before. You're either going to experience the pain of discipline, and it sucks sometimes, there's no doubt, or you're going to experience the pain of regret and loss. And then you'll fall into the victim mentality and make excuses. I am telling you, not asking, it's not an opinion. Successful people are different. They don't make excuses, they just get shit done. I know you all like to think they're just super duper lucky. Everybody has good luck and bad luck happen to them in life. Some a little more, some a little less. But we all get a little bit of it, period. What do you do with it? So you have to be honest with yourself. It's the only way you're going to build on that. And having people around you, and this is a very important comment I'm about to make, having people around you that want to lift you up versus bring you down is very important. Hang around people that are going places, that want bigger or better things. It's not just money. I'm not talking about money. Whether it's a healthier life, whether it's a more positive lifestyle, whether it's a healthier life with regard to friendships and relationships, hang around people that have those positive attributes and attitudes. You hang around the negative Nellies all the time, and there's always something wrong. Like hypochondriacs. Every time we all have one of those friends, right? You talk to them, and there's always something wrong every time you talk to them. Like, oh my God, you're tiring to talk to. Get those toxic people out of your life. Minimize your contact with them because some of them are family members and you don't have a choice. Minimize. Hang around people that have similar attitudes and ideas that you do. Could be a completely different field, but they have an attitude that you have. They want to go places and do things and live that positive experience life. Again, I don't care what it is. It could be volunteering at a soup kitchen, but they're positive about it, wanting to help other people. It lifts you up and it lifts the people you're around up. Hang around those people. You know what I'm talking about. Don't make excuses for it. We all have the good and bad in our life. We all have some of the negative Nellies. We all have some of the positive people. Try to learn from the people that have what you want or experiencing what you want. Try to learn from them. Like, hey, man, how'd you get there? And you know what? I think you'll be surprised. A lot of them have been through some crap. They've been through, they're like, yeah, I was where you were once. Great. That's actually wonderful. What did you change in your life to make it better? What did you do? Right? So, give that some thought. But I have to say, it's going to be some work. It's not going to be easy, right? It's going to be hard. Like, it's not like you're going to snap your finger and it just falls out of the sky. Like, it's challenging stuff, right? So, no, they're all around you, Sophia. They're everywhere. They're everywhere, right? It's kind of like, that saying, when the student's ready, the teacher will appear. You're rubbing shoulders with them every single day, right? Every single day. Expectations exceed experience. This is a big problem that new traders have, right? Expectations exceed experience. Be realistic about stuff. This doesn't mean you're being negative. It just means you're saying to yourself, hey, I want big things. That's wonderful. But I also have to understand that it takes time to achieve those things. Because if you come in and your attitude is, I have 6 months to get great at this, and what if you're not great at it in 6 months? Now you are what? You're being negative towards yourself. Well, why am I not better at this? What's wrong with me? There's actually nothing wrong with you. You're doing everything what you're supposed to be doing in the manner in which you're supposed to be doing it, but your timeline was unrealistic. That's all. But if you don't know that, you're going to get down on yourself, and you might eventually quit. You might focus on things that aren't the right things to focus on. Or you might start swinging for the fences. Hail Marys. That's not going to work. You have to do it in a systematic way. Okay? We talk about mindfulness. Almost every single lecture I talk about with regard to psychology, I talk about mindfulness in some way. Okay? And mindfulness is basically the ability to step outside of yourself while something is happening to yourself. Right? It's like, you see it in the movies, it's like that slow motion and you're looking around and you're going, what is happening right now? It's the ability to step out of your emotional brain and go, why am I doing this right now? Why am I about to break my stop loss? Why am I about to sell too soon? Why am I about to take another trade when I know my plan doesn't let me? Right? You're stepping outside of your body and you're looking at yourself going, what are you doing, man? And when you have the capacity to be aware of your thoughts, beliefs, and biases, but in real time, you also have the ability to change them. Because being unaware of them means you don't even know they're happening. Your thoughts and state of mind follow your emotion. Emotion doesn't follow thought. Right? So you guys have heard me say it. I've had this in several lectures through the years. Emotions are triggered when there is a disruption of a familiar or established pattern. Well, one of those is, I lost 2 trades in a row. It doesn't happen that often. What happens? Emotions. You're pissed off. You're frustrated. You're like, what is going on today? And how things happen matters, but it shouldn't. Maybe you got screwed by a couple pennies on both of those stop outs, and both of those trades ripped and hit your target after stopping you out. And you're just sitting there going, they're screwing me today. This isn't right. This isn't fair. F you. And then you jump into another trade, and that one's actually a bad trade. The first 2 were good, and the third one's bad because your emotions got the best of you. That's not being mindful. Being mindful would be saying, I took 2 good trades. They didn't work. My statistics suggest that if I take a third trade, I usually make it worse. I'm going to walk away today. As painful as it was to get screwed by a few pennies and lose 2R, be down 10 grand, I'm going to walk away today. And I'm going to come back tomorrow fresh and energized. Okay? Otherwise, I might make it worse. and it might do more damage than I'm allowed to do, and it might take me longer than it should to make my money back. And I don't want to do that. That's being mindful in a very emotional state of mind. That's the person on the outside talking to oneself, watching oneself from afar, saying, I know if I take another trade, I'll make it worse. Okay, come back into your body and tell your current self, you're done for the day. You're finished. Because that person speaking outside is looking at a crazy person, right? You're sitting there, this guy's about to do something really stupid. I better get back inside my body. That's what happens, right? You lose your footing, you lose your grounding, you start doing stupid shit, and you justify it through emotion, not logic, through emotion. And you almost always make it worse. And God forbid you do it once or twice and it helps you. You do the wrong thing and it works. That's bad, right? We create our understanding of our world from our adaptations to our deepest fears and desires. Guys, I'm not going to go off on this tangent. Fear is the single most powerful thing out there. The need to be right is also up there, but fear, 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 fear. We saw it for 3 or 4 years ago. They scared the living bejeebies out of people. Scared people stiff in their tracks. And people ran for the hills. And some of them still are. Common sense is uncommon. People react emotionally before they act logically. It happens in all aspects of our life. All the time. Okay? All of the time it happens. The question is, how do you handle it when it happens? That's the mindfulness part. Hey, for example, I'm at the bank yesterday. Guy in front of me is taking forever. He's getting frustrated. But at the end of the day, it wasn't anything the teller was doing wrong. The system was giving him a problem. Had his manager come help him. My point I'm making is the customer is getting extremely emotional and pissed because this is taking a lot longer than normal and longer than it should. That part is true. But the mindfulness part comes in for the why. Why is it happening? Is it that person's fault? Or is it something outside of my control? And that's trading. Sometimes it's outside. Look, and a random news report comes out right now. Bam. Market tanks $2. Your trade stops out. That is completely out of your control and does not give you the right to take a stupid bad trade right afterwards. That's emotion and not mindfulness. Sometimes, and we all do it. We all do it on some level. You ever have that situation where you know damn well, gosh, this is really nobody's fault, but I'm really pissed off right now. It happens. Like somebody just turns around and their bag hits the glass of chocolate milk and it drops on the white carpet and you realize it's really nobody's fault, but you're pissed. That's not being mindful. You need to keep that, quote, in mind when you trade. You have to develop this as a tool to maximize and examine our thoughts in the middle of a trade. Before we take a trade, after we've exited a trade. If you lose objective perspective, you're done. You're done. Because then you're just an emotional being at that point. And guys, you know what I'm talking about. Right? Emotions, unfortunately, trump logic. But logic is what makes you a better trader. And we're talking about trading at the end of the day. Yes, it happens in the real world, in all aspects of life. But for our purposes, trading is what we're talking about. Give it some thought. This is where recording yourself as a trader, not only with a video, but with a microphone. OBS, Open Broadcast System, it's free. Go get it. Buy a $50 Logitech camera and another $50 mic. Get $100. And you could videotape yourself every day you trade. Watch yourself. Go, oh my gosh, I'm a mess. Then talk to your trading buddy. Okay? Exactly. Presence, right? You detach. Everything has cause and effect. You have to determine why you're doing what you're doing. So now we are moving past where you videotaped yourself. You're like, damn, I really do get quite emotional. Now, what is the cause and effect of my emotions? Now I see myself being this emotional. Now sometimes, not always, sometimes we can logically fix a problem. Wow, if I continue to be this emotional, I'm going to lose my trading account. And for some people, that fear, that threat is enough to change. For other people, it's just not. They have a gambler's mentality and they'll just keep dwindling it away. So you have to find out where you are in that spectrum, right? Because everything has a cause and effect. If you keep doing what you've been doing, you'll keep getting what you've always gotten. And if you keep breaking your plan and not taking stop losses, well, you'll keep dwindling your account down. So you have to determine why you do what you do. If you sell too soon, is it because you're scared to give back profits? If you're scared to give back profits, is it because you need the money? If you need the money, how can you overcome it? Are you risking too much money? What is the purpose? What's the reason behind why you do what you do? Because until you can get to the root cause of that, it's going to be challenging to fix it. It's going to be difficult because you don't know why you do it. So this is a process you have to go through, and this is where a trading buddy can be very helpful. This is where Cliff's coaching and psychology can be very helpful. Okay? And honestly, sometimes the answer is obvious, and sometimes it's not what we want to hear. Right? Poor preparation. Maybe you don't have enough capital to trade. Maybe you're just a typically emotional person. You just get wound up quickly. That happens. Some people are just that way. Maybe you're overly righteous. Oh, I'm never wrong. There's a lot of reasons that this could be manifesting itself. Maybe it's stress for your timeline. You're like, oh, I thought it would take 6 months. I'm 5 months in and I'm not getting anywhere. Maybe it's that. Maybe you have to make some tough choices. Maybe you have to cut back on your expenditures. Maybe you have to get a job, second job, first job, part-time job. Maybe you have to sell something. But you have to make some decisions, right? Yes, it could be. But the thing there, Cliff, and I agree with you, is Cliff is saying sometimes it's even family issues from back in your childhood. Absolutely. But regardless of what it is, and this is key, whose fault it is, it's still you and your life, which means it's your responsibility to make the necessary change. You can't blame your parents for something they did 35 years ago. While it may have an impact on who you are today, you have to one day wake up and go, I'm my own person, and I'm an adult, and I can fix this. You can't live your life as the victim. It's just not a productive way to live. You might be a victim. You might, genuinely speaking. But you can't live your life with that attitude because there's nothing good that comes from it. Because if you're a victim, you're basically saying, I don't have control of my life. It's someone else's fault. I know people like this. And it's not productive. Right? It's really a path, a dangerous path to go down. And it's exactly right, Sophia. Sophia said it's not a useful way to think. It's not useful to think that way. 100%. It's not. It's not productive. It's not helpful. It's not useful. While it may be true, it's just not helpful. All right. Summary. Are you willing to lose money on a trade? If not, you don't take it. Okay? You don't take it. Learn properly from the start, as it's much harder to correct deeply ingrained bad habits. Guys, what's one of them that I bring up all the time when we talk about deeply ingrained bad habits? It sounds so simple, and it is simple. One of my pet peeves with this, and you're going to be like, what? That's stupid. People who take light volume trades. It's a pet peeve of mine. I sit here and I'm like, and then they say to me, but it's only $5 risk. Exactly. Brian knows, Jordan knows. And I sit there and I'm like, you're right. It's only $5 risk, but you're developing a poor habit right now. Why not just nip it in the butt right now? You'll never have to worry about it later. Just get rid of trading those 100K, 200K stocks. We won't have to change later. Imagine that. And when you're new, it's a quick fix. It literally takes you a couple weeks or a month to get out of that bad habit. 5 years later, you might be used to trading those thin stocks, and now it's a much bigger issue. You know? You will only win if you aren't afraid to lose. I know this is a tough one, guys. Look, we all have a little bit of fear of loss in us, right? We all have a little bit of that. Nobody wants to lose, okay? But you have to embrace it, that losing is part of winning. I know it's cliche. It is. You have to lose sometimes to win other times. I look at it as the opposite. I go, okay, hypothetical. If I bat 60% and I've just lost 2 or 3 trades, I look at it as, well, I got those 2 of those 4 losers out of the way on, say a 10 trade stretch, and I just lost 2 in a row. I was like, all right, of the next 8 trades, I should probably go 6-2. Probably some version of that. Good. I'm closer to the reversion to the mean now. That's the way I look at it. I try to spin it in a positive way. Trading is simply having the knowledge to know when the odds are in your favor, the patience to wait for that moment, and then the discipline to handle the trade properly when it goes in your favor, and properly if it goes against you. Read that statement right here. Let's just, if I bold this, it might put it to another line. No, it didn't. There. Bold now. You really need to read that. Okay? How are you going to trade later when in that situation you would need 20,000 shares? I'm not sure what you mean, Val. I'm simply saying take trades that you can scale up to just about any risk, 10 or 20,000, right? Do it from the start. I actually can't take spready trade. Jared gave me PTSD. Good. That's a good thing. I'm glad it helped. It worked, right? Read that and read it many times over. That's all trading is. It's exactly what it is. So simple, but not easy. Identify your edge, assess the risk to reward, and monitor your emotions. Yes, monitor them until you get to a point where it's unconscious competence. You're just unconsciously competent enough. You don't have to, quote, monitor it. You just are that. You become that, right? You just become that. Succeeding in the stock market means controlling natural impulses and reversing unwanted emotion, i.e., don't fear losses, rather hope for gains. Wins and losses are part of this business, right? The question is simply, are your wins larger than your losses? And if the answer is yes, you'll succeed. If the answer is no, you won't, or you'll have to adjust to a super high batting average. That's it. It's so simple, but it's just not very easy to do. And guys, I want to be clear about something also. You might be feeling pretty good right now. Oh man, this is a great lecture. He's hitting the nail on the head with all these things, and that's great, and blah, 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 blah. But that doesn't mean when you go trade tomorrow that you're not going to make some of these mistakes. Just because you feel good right now, you're feeling good because you're not in the middle of a trade. Right? You're not in the middle of a trade. But in the middle of the trade, that idiot comes out, the one that hangs out on your left and right shoulder, hangs out on both shoulders most of the time, and whispers in both of your ears, sell it. That's when you're close to target. Hold on to it. When you're about ready to stop out, it'll bounce. Just hold on to it. Okay? It's insane. But just because you feel good right now, because I'm talking truth, doesn't mean it's going to manifest itself in reality tomorrow in terms of doing the right thing. Right? Good trades usually jump out at you. It's not rocket science. I mean, good traders know what I'm talking about. Right? Cliff knows exactly what I'm talking about. When you see something, you're like, damn, like that fast. You're like, wow, that's good. The ones we got to think about, they're usually the ones that get us in a little bit of trouble. But there's trades like today I said about Apple. As soon as after the fact, I saw, I was like, yep, I missed that one. Those are the trades you want to figure out how to not miss, right? They're the trades that you want to focus on the most. And if you keep yourself focused on the positive, let me explain. You guys have heard me use this analogy, all right? This is from Dennis Waitley. Psychology of Winning is the name of the course, the book, the tapes, the CDs, whatever. You motivate people with the positive of an idea, not the negative. Now, don't get me wrong. Some people are highly motivated by fear. They are. Fear. I don't want to go back to living on the streets. That's fear. But most people are motivated by positivity. And the positivity is this. The manager walks out to the pitcher. The manager doesn't say, hey, Johnny, don't throw the curveball. No. The manager walks out to the pitcher and says, Johnny, I want you to throw him a fastball. See the difference? See, if you go out and say, don't throw the curve, Johnny's thinking, well, why would he say it like that? Why would he tell me that? Should I throw him the slider? What? The cutter? No, just throw the fastball, Johnny. Just go out and tell me what you want me to do. Throw him the fastball. Motivate with the positive of an idea. Now, once in a while, I do the same thing with you guys. I'll motivate you with the negative of an idea. Hey, you're going to be working for your boss for a long time. That's a negative connotation. You're going to be working for that boss for a long time if you don't get your shit together. Or I could flip it and be more positive and say, don't you want more freedom and flexibility? Wouldn't it be awesome to be hiking right now? That's the positive. Instead of saying, man, you're going to be working for that guy or that girl for a long time if you keep doing this. Instead, I could say, hey, Cliff, Sophia, Jeff, if you fix this, you could be hiking right now. You could be on vacation right now. That's the positive angle of it. Okay? So where I'm going with this, to tie it back into trading, is good trades usually jump off the page. You know what they look like. Most of you, if you're brand new, you may not, but most of you have been here. You know what a great trade looks like. So you just ask yourself, why do I take anything but these great trades? The answer is, I don't know. Emotions, right? Just wait for these great trades, the ones that jump off the page at you, and just take those, right? Discipline is the key to success, and discipline is simply doing the right thing at the right time, even when it's difficult. Do you think you want to really get up at 4 in the morning to go run 5 miles in the rain on a cold day? Probably not. But you do it anyway because it's going to move you closer to your aspirations, hopes, dreams, goals, where you want to be, right? Trading is 99% waiting for entries and targets and 1% activity. The 99% should be spent scanning and looking for opportunity. Okay? All right. You know what? I'm going to have to cut this here. I have like 6 more slides that I wanted to go over. Oh, I'm going to go over 1 more. 2 more maybe. Okay? 3 more maybe. No, I literally have 10 slides left and I can't. I drug this out. I was going to go over some charts and talk about how different managements have different outputs or different outcomes. But at the end of the day, they work themselves out, right? You have different expectations for different managements. But at the end of the week, the month, the year, they usually do what they're supposed to do. Okay? So knowing the expectation. Anyway, this is a little bit old. Okay? This is a little bit old. As you can see with the dates, January 2022. That's okay. Trading can be frustrating. All right? This is real results. Okay? 1, 2, 3, 4, 5, 6, 7, 8, 9. I'll call that one break even. All right? 25 cents. 8 losing trades in a row, and I would say the majority of those were full 1R losses. Right? Full 1R losses. 8 full 1R losses. Popped $1 or half an R, then stopped full. Popped 30 cents or point, then stopped full. Popped 5 cents, then stopped full. 84% play. Ooh, that one sucks, right? Popped 33 and a half or 0.86, then stopped. Popped 1.1R, then stopped. Popped 0.9, then stopped, then stopped, then stopped, then stopped. And you're sitting there, holy shit, this guy sucks. It's just reversion to the mean on both sides. So where I'm going, though, is this was not a fun stretch. Kind of sucked, didn't it? By the way, look at those 2 TSM trades. It was getting me back then, too. That's why I don't trade it much. Anyway, but what happened down here? 3 trades. 3 trades. I'm going to round it up just so I can do the math easier. 2,000, 4,000, 4,000 is 10 grand, right? It's under 10 grand. I think it's like $9,600. Yeah? Okay. Those 3 trades took out those 8 losers, right? 1, 2, let's call it 1,000, 2,000, 3,000, 4,000, 5,000, 6,000, 7,000, 8,000. There's 9 grand. Take out a couple few $100. There's like $8,700 in losses. Take out the 290. It's like $8,500 in losses. And in 3 trades, I got it all back plus $1,200. Now, is this a good 10-day stretch? Heck no, it sucked. It was terrible, but it was profitable. Do the batting average here, right? 1, 2, 3, 4 winners. I'm going to eliminate this one and this little guy. 4 winners and 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 losers. Really, it's more like 3 winners. $290 isn't much of a winner, is it? 3 winners took out 10 losers. Okay? That is okay if you understand your management. Okay? If you understand your management, that, hey, going to have some losing streaks, but the winners will more than make up for it. Again, not a fun stretch, but again, how often are you going to have 8 losers in a row? Not often, most of the time. How did you handle it, though? This goes back to your psychology and your emotions. How did you handle the losing streak? Right? A lot of work, man, for a very small gain. Here it is. I blew it up bigger. You can see it. The reason this is on top, it's the same thing you just saw. It's just I made them bigger. Okay? I cut it in half and stacked it. I cut it in half and stacked it. That was a heck of a lot of work for not much of a gain. But you know what it wasn't, guys? It wasn't a $10,000 loss. And that's what I want you to take from this. Okay? That's what I want you to take from this. That these 3 trades took out 10 problems. And then you say to yourself, probably not going to have 10 losers in a row very often. Sweet. But now you know, and this is important, now you know your emotional ability to overcome it if it ever happens again. Because now you can lean on it. God, Jared, do you remember January 2022 when you lost like 8, 9 trades in a row? Yeah, I do. Well, we got out of it then. We'll get out of it this time too. It really is how you have to take it. Sit there, because you remember that game we were down 27 points in and we came back and we won? Yeah. So what does that tell me? The next time we're down 27 points, I'm not packing it in. I'm not giving up. I'm going to fight till the buzzer. I'm going to fight to the end. Think about it. I'm going to fight to the end. That's the mentality. That's the attitude. You did it before. You know you can do it again. And then you'll have days like this where Unmol rocks out $7,777. In fact, didn't he make like 7 grand today? I thought something like that. Didn't he say he made that? I can't remember. Maybe it was less than that. I could be wrong. But I thought he said that he made 6 or 7 grand today. Guys, I know I show this from time to time. But I do lean back on this kind of stuff. It's not a ha-ha thing for me. You guys probably hear me talk about it all the time. My love for this country and how lucky and how good we have it. And you've seen it. It's not new. You've seen it. It's not new. If a kid like that can have a smile on his face, what right and reason do you have to not be smiling every day? Think about it for a second. If they can smile in those conditions, what right do you have to not smile? Because you're effectively, and this is what people don't want to hear, okay? I don't care where you are in this country in your terms of your economic status. you're pretty much the equivalent of Bill Gates or Jeff Bezos or Elon Musk to this person. You are. $1,000 is like being Elon Musk to this person. Okay? You go down the street, you go to the grocery store, and you pull out some milk, some eggs, some water, some whatever. And it's there anytime you need it, anytime you want it. For me, it gives me perspective. Genuinely and truly. It's not I don't just put it in a lecture for shits and giggles. It really gives me perspective. When I'm feeling bad or down or angry or upset at something, I just go look at the struggles other people go through, and I think, you have no right to even think like that. Check yourself. Just go check yourself. Because I'm not saying it's wrong to have negative emotion or be upset from time to time. That's fine. We're humans. I'm not taking that away from you. Just don't harbor it. Don't carry it. It's unproductive and unhelpful, and someone else has it way worse than you. Someone right this very moment's taking their last breath too young. Not at 89 years old, at maybe 29. They're taking their last breath today. Unmal's one of his best friends was just killed in a motorcycle accident a few days ago or last week. I just talked to him yesterday. Wife, kids, got his life back together, was an alcoholic 2 years ago, now is on the straight and narrow, doing everything right. Dead. Dead. It's going to happen to all of us at some point. You don't know when your number's punched. Could be a minute from now. It could be 74 years from now. You just don't know. It's not a joke. Some people go, it's great, Jared. It's for effect. It's not for effect at all. It's to say, hey, I have it really good. So why wouldn't I put my best foot forward? Like, it's you're given an opportunity that not everybody has. So don't waste the opportunity, because there's a lot of people out there that would do more with this opportunity than you. Does that make sense? They would kill to have the opportunity you have. So don't waste the opportunity, right? You're like a custodian of the opportunity, if that makes sense. I don't know if I've ever worded it that way. Like, you have this opportunity and you're a custodian of this opportunity. Be a good custodian of this opportunity. Really use it to its fullest capacity. Be the best you can be, so that someone else doesn't look at it and go, man, he wasted or she wasted that opportunity. You know? Tough, man. So, I'll leave you with this. Then I'm going to head off. You can't go broke taking profits. Yes, you can. Affecting real change happens quick. It's work. It's hard work. In anything in life. Profitable trading is for lucky? Nope. It's for the hard workers. Okay? Can copy your way to success without putting in the time? Just doesn't work like that. Doesn't. Success comes quickly? It doesn't. We'll learn from the market, so I don't need an education. You can learn a lot from the markets, but you still need the education. You need both. You really do. You need somebody to teach you this thing. Otherwise, it's going to be very expensive. Past success in another field gives you an advantage. I am a byproduct of this stupid thought process. I was this person. Oh, I'm a Wall Street institutional trader. I'm smart money. Everyone else is dumb money. Bullshit. I was dumb money. Dumb money when I started this business. The market makes the most R dollar value. Sorry, this management makes the most R dollar, so it's the only one or the only one I should be using. Wrong. You have to use the one that matches your personality style and still makes money. You can work your way up to the better management or more profitable management. So you're going to start with something that's probably not the best management, but it's the best for you right now. Right now, okay? Susie Q makes a ton as a scalper. I'll just use her approach, or I'll just copy her trades in the chat room, or I'll just do this, or I'll force myself to learn her style because it works so well. It's not easy to do. You might be able to, but most of us take the core concepts and then we apply them differently. I got an email from somebody like a week ago saying, Jared, I'm so confused. You and Unmal disagree on things. Yes, of course we do. But you both are PTS trained traders. Yes, and we disagree on tons of shit all the time. That's okay. Our core foundation is very similar. He manages a little different. He uses options. I use stocks. He looks at things sometimes that I think are going to go higher, and he says they're going to go lower. We're viewing something different, but a big factor is also expectation. He might be looking for a 30-cent option scalp, and I'm going, I can't get 1R from that. 30-cent option scalp is literally like a quarter R to me. Half R maybe. Serious, I'm not joking with you. A 30-cent option scalp is like a quarter to a half R for me. Well, he might be able to just take one bar that drops 50 cents on Microsoft, and he got his 20, 30-cent option scalp. 50 cents on Microsoft to me is like a quarter R. He did that today 3 times. It works for him. Mine works for me. Different approach, same stock. Great. Trading is the great equalizer. A high school dropout or a Fortune 500 CEO, the market doesn't care. It's awesome. It's wonderful. We're all the same to the market. We're nothing. That's what we are to the market. We are literally nothing. Okay? So your ego and experience doesn't give you an advantage unless it's experience in trading. Okay? Exactly, Cliff, right? It's just a different approach. So I hope, and I went much longer than I intended, and I even skipped some slides. I hope that you guys found this helpful. And I really do hope, and this is what I want to leave you with. I hope that you won't get happy, excited, and, oh, this is a great lecture, but then leave that in the closet tomorrow. I want you guys to really work on this stuff. This isn't supposed to be a session of Oprah. It's not supposed to end after the show finishes. This is supposed to get you to really think about your trading and start to make these improvements. Because tomorrow's a new day. You're not going to have this positive rah-rah feeling after somebody punches you in the mouth tomorrow and you take a losing trade. It's going to happen to me, it's going to happen. I want you to take this and really work on it. Like I said, it doesn't end with the end of the show. It's just the beginning. So work on it. Find that trading buddy, trading partner. Track those trades. Do all the things you're supposed to be doing to be good at this. And you will eventually be good at it. Maybe quicker or longer than you expect, but you will get there. As they say, PTS, it's hard to beat someone who never gives up. I'm Jared Wesley of Live Traders. We'll get back at it again next week.